Well, joining us for more is Peter McGuire from XM. Pete, very good to catch up with you on this Monday morning. Big week ahead. First, though, let's just look back. That equity selling continued on Friday. Obviously, investors wary of what's going on in the Middle East. Also, the prospect that rates will remain higher for longer.
Well, exactly. And good morning, Andrew. Yeah, Nasdaq down 1.5%, and 1.25% for the S&P. So certainly ended the week under some pressure, and we saw huge volatility also with the 10-year. So when you're taking all that on board, I think there's a flight to safety at the moment with those high yields, and that seems to be attracting a lot of interest.
All right, we might just put up that graphic of what's going on everywhere at the moment, just in terms of equities, the dollar, commodities, and so on. Let's bring that one up just to get a sense of where we're at right now. There we go, just in terms of that daily performance. What are your observations then at the moment, Pete?
Well, as you can see there, Andrew, I mean, have a look at WTI. It's just been bid up and bid up strongly, and it's been a massive week for crude, or really for a week and a half. It was sold off, as we know. October's been such a dramatic month, massive sell-off and then a big push-up. And you're sitting there, the best part of $92 for Brent. And that gold market also is now, edging very close to 2,000. We've seen around about a $350 move from its high to its low and then back to its high over the last couple of weeks. So yeah, just incredible volatility. And then, naturally the currencies, US dollar seems to be, king dollar back at 106 level for that US dollar index. So very, very strong at the moment.
Yeah, it's interesting. Obviously, when you take a look at that, we're seeing that continued strength of the US dollar as well as gold. Normally, you've got that inverse relationship going on, but clearly this is all about what's going on in the Middle East with those rising geopolitical risks.
Well, that's exactly it. The war premium, the uncertainty, and naturally, yes, it's normally it doesn't move like that. But I tell you what, it's an unusual time, and that truly is, I think, the joy of these markets, because traders are certainly taking advantage of those big swings, and the geopolitics are pushing it hard.
Pete, also investors looking at that ongoing strength of the US economy, which has surprised many, of course, maybe not the least being the Federal Reserve.
Yes.
What are we seeing? Because we do get that key read for the September quarter on US GDP out this week.
Well, exactly right. I mean, last quarter, Andrew, it was 2.1. We're expecting 4.1 for this month, and it could be a very big surprise to the upside, considering the Atlanta Fed model, which is fairly on the money all the time, and they're running at around about 5.4%, and it actually could be higher than that. So it's going to be a big announcement, and I think the market's waiting for that number to drop because of the impact that could have naturally to the Fed and how that all pushes dollar and naturally to, I would say, the equity market.
And yeah, we take a look at also what's going on with those bond yields. Certainly we saw the 10-year push above 5%, the highest since 2007. What are your observations here, Pete?
Well, it's been a massive swing last week. Yeah, you had that push just above 5, and then all of a sudden, we've seen 40 basis points wiped off it, and then a big whipsaw and volatility. So again, volatile times, Andrew, and that really is creating, I think, a flight to safety as they edge higher. So what does that do to dollar? Well, traditionally it'd push it up, and you're in that 106 sort of level. It's been a big rise over the last couple of months. And yeah, there the Treasury yield is, it's just, one-way traffic. So I'm sure that both might continue an uplift up to Christmas.
Now, this week we've got a couple of key central banks making their policy decisions, both the Bank of Canada and the ECB. What's expected?
Bank of Canada around about a 15% chance as far as probability of a rate rise, Andrew. So I'm erring on the side that it won't happen. Inflation numbers are a little bit better than expected there in Canada. You're running at around about 2.8% for September. As far as the ECB is concerned, I think Lagarde will sit on her hands, and possibly you might even see talk of rate cuts early in 24. We'll just have to wait and see how that all materialises. But yeah, they've got some pretty dire situations over there in Eurozone as far as PMI surveys and what's happening across the business sector.
Yeah, and in fact, you look across the channel, what's going on in the UK at the moment too. I just see the latest numbers out just in terms of retail sales coming off, obviously those cost of living pressures being felt in that regard. What's your outlook for the UK economy at this point?
Well, it was a very weak summer, and from an unemployment standpoint, naturally, and the other side as far as spending. So yeah, it's not rosy at all, leading into possibly a bleak winter. And I think that the UK economy overall has got a large handbrake. So we'll just have to see where that rolls as far as Christmas spending and the overall themes moving forward. But yeah. It's going to be a tough, hard grind, I'd say, leading into first quarter for the Poms.
All right, let's refocus on what's going on locally then, Pete. Look, we do have Reserve Bank Governor Michelle Bullock speaking tomorrow, but the key data this week will come on Wednesday, the CPI read, which will clearly influence what the RBA does next.
Absolutely, Andrew. I mean, if it's a surprise to the upside or to the downside, we've just got to wait for those numbers to drop and see. Naturally, I would say, internationally as well, how that's reading, and then how that it moves forward from the governor's standpoint. And do we see possibility of a rate rise before Christmas? So I think everyone's just waiting for those numbers to drop. It's too hard to analyse in the sense of, you can be out quite significantly. So just let's see the numbers drop. The impact to the Aussie dollar running at around about 63.2 at the moment. And I won't be surprised to see possibly a 62 handle sometime this week.
All right. So are you expecting then the Aussie will remain under pressure as we head into the end of the year?
I think so, Andrew, considering where the US dollar is, and King dollar seems to be really ratcheting up, and those bond yields, increasing in the States. So yeah, I think that's going to force the US dollar up. Overall, that GDP number is going to be strong in the States, and that in turn possibility of a rate rise there. So stronger US dollar, and that's going to put pressure, I think, on everything else.
The Aussie, of course, being a commodity currency, and that's very much contingent on what we're seeing in China at the moment. We have seen some improved numbers out of China. What's your interpretation of what you've seen there?
Well, yeah, China's numbers are fairly good, and in the sense of where they were and where they are at the moment. So the overall theme there, base metal prices haven't really rallied at the moment as far as copper and so on. But yeah, I'm expecting possibly a better push up over the next couple of months for China, and we've just got to see how that materialises. The property sector hasn't been put to bed yet. That's still a large overhang. So someone's holding the debt, and we've just got to see how that also rolls into first quarter. So it's again going to be a very interesting couple of months for China, Andrew.
Pete, I should also note Bitcoin did push above $30,000 for the first time since July. This is all that ongoing speculation that the SEC in the States is likely to approve a spot Bitcoin ETF.
Yeah, that ETF number, there was a rumour came out Monday and that really pushed it up, and then that was a little bit of a false one. So, but the overall momentum, it's above that 200-day moving average. It hit 30,000 and $50 or so, and it's given up a little bit of that hot steam over the last matter of hours. But it seems to be tracking northwards, and we've just got to see how that all goes. Once an ETF's there, then I think that's going to add a level of support to the market. And yeah, it's a long way off at 65s, but hey, it's a long way from 15 as well.
Yeah, absolutely. Pete, overall, what's your portfolio positioning at the moment?
I think you're going to be looking at very much the gold market and silver, Andrew. Have a look naturally as far as energy prices. And I think that there's further upside for both of those in the short to medium term, and possibly how can you resist the temptation as far as US yields and naturally the US dollar.